What's up, guys? All right. Unplanned video. I just hopped on here and started recording because I want to show something very important. I was talking about it yesterday in the live stream a lot. If you're new, I live stream Tuesday, Wednesday, Thursday during the London session. Check it out. And I make educational videos, and it's all free, and I trade live and let you know what I'm doing. So yesterday, during the stream, right? Buck Wild. We'll talk about that. We're talking enough about the Buck Wild background. But one thing I was doing yesterday in the stream, if you notice, I was constantly going back to this, looking and talking about this short. Even while price was coming down, I said, well, maybe we're still going to do it. And why did I say? Because there are stop losses up here. And I've seen this enough times to know, right? I said yesterday, I'm sorry I'm obsessively looking at this, looking for this trade, but I know how smart money operates. I know how the dumb money operates, and there's a really good chance, just a classic setup of high volume rejection here for a short, right? And I just kept going back to it during the session. As I said, maybe it's for a U.S. session when it would play out. That's when it played out. Maybe you took advantage of it. Maybe you know my setups and how to get in. But the point of this video is to understand why. So a quick kind of reminder of where we were. The euro, the day before yesterday's stream, had this really out of the ordinary size down move, right? We're talking about the euro generally dropped at this time of day against everything. Very weak euro, a sell-off on the euro, right? It was very fast, okay? Now, these kind of moves here, this is just everything I had marked up yesterday and where I wanted to take the short. Now, these kind of moves that are very fast are going to trap traders in the short positions down here at a bad price. If we look back, what are we looking at? Range, right? Look at the highs and lows. We're looking at ranging conditions structurally here, right? There's no trend going on. Now, keeping that in mind, you have a really quick move to the downside that's going to get a lot of traders to start shorting late. There wasn't very much time to get in this short. You look at the small time frames very fast. So you know there's a lot of short positions in this area all throughout here where the dumb trades are becoming bearish, right, and getting short after the move's already occurred and selling at the bottom of a range, which is the last thing you want to be doing. You want to be buying at the bottom of a range, especially the fake breakout patterns, right, and selling at the top of the range. So that's already, you know, part of this situation is looking to sell and high and buy low in a range. But you have a situation like this where you know there's a lot of traders in short from here. How do I know? Because I know the nature of traders that don't know what they're doing, and they see something like this and they sell. And again, they didn't have much opportunity to sell in here because it went so fast. Okay, so it's even extra good knowing that they got a really bad lane entry chasing this down move. Okay, why does that matter? Because now we know where their stop losses are, and it's not easy, it's not hard at all to figure out where the stop losses are. When you're in a range, they're just outside of the range, right? I think we had an entire week last week of the pound dollar doing fake breakouts on the lows. I'll point that out. So it's a consistent behavior. Okay, we can find it all over the place. If you look at just the low here, right, and we go slightly overshoot, and then if you have that low marked, we slightly overshoot the low, right? That's where the stop losses are. Now, why does smart money, the smart traders, why do they care where the stop losses are? Because that gives liquidity, that gives whatever you want to call it. To understand it, that gives smart money an opportunity, right? Let's hone in on this. This is where the stop losses are, up here outside the range. Yeah, sure, there was some along the way, but there was a whole bunch right here, and we knew it, right? So that gives smart money an opportunity. If you sold here as dumb money and you have your stop loss up here, right? You're giving up your position to smart money. Think of it that way, right? So if you sold, you're buying back as you close from who? Smart money. Okay, if you understand what I'm saying. They're the ones selling, taking the other side of your buy, which is the exit of your short position, right? Okay. So as the price comes up here and that big exiting of short positions goes on, that makes a lot of, in this case, currency, available at this price. There's a lot available, right? And if you were able to sell a lot of, there was a lot of available buyers, right? Because they're getting out of the short positions, it's considered a buy. If there's a lot of available buyers at a high price, would you not want to sell to those buyers, right? It's not going to push down price. You're able to sell and maintain that high price. We're talking about supply and demand balance. There's a lot of demand, therefore you can sell a lot at that price, okay? And that's what's going on as these short stop losses are getting hit. So I'm looking at this, salivating as smart money is, saying, I'm just following them, saying we had a chaotic background. It was a little buck wild for a little while. Reactionary moves on the chart off news. Also on the yen yesterday, right? We were looking at these sudden reactionary moves, bigger moves than usual at odd times of day based on news and what's going on. So to come out of that and say, okay, let's make sense of this. What are we in accumulation, distribution? Do we have strength or weakness in the background, right? Trying to do a regular analysis off of something that was a little wild and a little reactionary. And so I go into the session saying, I want to see a couple of moves. I want to see some information before I really do too much analysis. Let them figure it out. Let the charts tell us what they're up to as we can get back to some normal behavior, right? Because we want our normal setups. We're not trying to chase news moves or any sort of thing out of the ordinary. Repeat. The clean setups is ideal. So it's really the opposite of that, right? But in this situation and having just the experience of knowing how these guys work, right? The smart money, as they're called, they want those stops. If nothing else, just to grab that and have a down move that makes a lot of money in a few hours, right? And that's exactly what happened. And the hallmark of this going on is the fake breakout in a range condition with high volume, right? I even drew in the volume yesterday. I was talking about, selling up here, and I drew in the little, line in here showing, making sure we have high volume. That's a lot of activity going on as all those shorts get out of their position and as a buy in the market, and the smart money takes advantage of that. Okay, there's a lot of activity going on here, liquidity, whatever you want to call it, right? So it makes a lot of sense. So now smart money has all the shorts, so to speak, right? And as we come down, that's when they're making the money. And pre-positioning short here is called distribution, or accumulating short positions, right? Building up short positions at a good high price where they can do that a lot. And then the other way of entering the market, which is how they mark down price. And that's a longer discussion about how that works. But understanding the stop hunt, right? And this was just a really obvious case where where positions are, bad traders are positioned where their stop is. This one's very obvious. So it's a good example of this. The volume has to be there. If you know VSA, I take some of the basics from there and use that. We're closing at a fake breakout or an up thrust or whatever you want to call that. Closing well off the high of the bar or candle, right? Closing well off the high on high volume. And you can see this on a 5-minute chart, all the activity that picked up there, right? This is just during that 1 hour, but that's the highest volume of the day. So this was like ABC, the simplest thing, and again, that's why I just kept going back to it in the live stream saying, well, it may be later, but we're all salivating. I'm not the only one looking for this spot to sell, That's the logic behind it. So as you go through your charts and you see stuff, always keep in mind, it's part of what the market is doing. Always keep in mind, where are the stop losses on the bad positions? And how would that aid smart money in getting pre-positioning for a move, giving them available positions at that price, giving them a lot of liquidity at that price area to get into a position, right? And how would that be advantageous to them? And as I've been saying for so long, the way that the dumb money trades actually signals to smart money what is best for them to do, right? It's player versus player, right? And when your opponent, so to speak, shows a weakness, that's something that you want to go after, right? And trading-wise, it's just, it's just a way to make the most amount of money on a move, right? Is to build up such a large position. We're talking about very large banks, institutions, things like that, right? How do you make the most money on a move? Hedge funds. By getting the biggest position in before you go. And so things like this will give them that opportunity, right? If nothing else, and the market is chaotic, right? And you end the day where you started, which is what we're looking at here. We start the day here. We end the day here. but they made their move, right? They had their maneuver. It's very predictable. So keep in mind the weak positions, the late positions that chase price. Where is their stop loss? This is one example of where you'd obviously put your stop loss outside of the range, thinking that you're smart, going short and putting your stop loss here. Not so smart, right? That's group think, right? We look to sell when we see that. So hopefully this is getting you thinking about that. Where the stop losses are of those weak positions. Find them. It's not hard to find. If you were an emotional trader chasing price, right? And where would you put your stop? And we can talk about more about that in the future. So that's the lesson for today. I'll be streaming in a little while. Today's Thursday, January 19th. And hopefully that's helpful for you guys. See you soon.